So the IRS in the state of Minnesota, they've extended the tax deadline this year to May 17th.
When you decide to file your taxes, it is important to keep Social Security in mind. Our money expert, Dustin Smith from Wealth Enhancement Group, joins us now to explain why. Dustin, nice to see you.
Nice to be seen. Thank you.
Social Security, sometimes I think people don't quite know what to do with that. Where do you report it? Is it taxed? Well, we don't know much about Social Security yet. So is it taxed?
It can be, right? And this is the thing that I think really catches people off guard, right? I think a lot of people say, well, didn't I pay taxes already to get Social Security? I'm like, yes, but it's just a different subset of how it is taxable. So, for example, let's assume that your only income is from Social Security. Well, at that point in time, none of that's going to be taxable, okay? So that's really key. However, once you start adding in other sources of income, that increases the amount of your Social Security that can actually be taxable.
Mm-hmm. So the amount of Social Security that's taxable is based on your income. So there's actually almost half of Minnesotans who get Social Security. That Social Security is actually not taxed. I mean, I think this always gets lost in this conversation here, because there are a lot of people whose Social Security is never even taxed.
Absolutely. Absolutely. And to understand the taxation of your Social Security, you need to understand something that we call provisional income. Now, I'm going to get nerdy just for 1 second here. So provisional income is essentially when we take half of the Social Security benefit that you receive, and then we add on any other sources of income on top of that. So, for example, let's say that a couple, they receive $40,000 a year from Social Security, right? We would take half of that, $20,000, and let's say they take out $10,000 from their IRA. Their provisional income, therefore, would be $30,000. And then we apply the provisional income to a whole separate set of brackets there. And that's how we can find out if it's taxable or not.
So what strategies, or what do you recommend, short of what we talked about in our last segment, where people are hiding money offshore, what can people do to protect themselves here?
Sure. So when you're talking about the taxation of your Social Security, it can really make a difference, right? You can go up to the point where 85% of your Social Security benefit can be taxable. So that can really make a difference in what you owe the IRS. So I always say it's important to be thoughtful about the transactions you make during the year and how it can affect the taxation of your Social Security. Mm-hmm. So, for example, let's say that you own some stock in a company and you're real excited to sell it. Well, you might want to be thoughtful about the amount that you sell, because not only will you pay taxes on that, but it can trigger having some of your Social Security being taxed. And so it's kind of like this, secret taxation that comes in and grabs people from the side, where they didn't really see it coming, because a lot of times people don't know it's going to be taxable.
Yeah, and if there are any snowbirds that are watching us, you know that not all states tax Social Security either.
Correct, right? So there's some people that they may find that safe haven in another state where they're not going to have the taxation. But to be really fair, this is that thing where I always say you want to work with your accountant or your financial advisor any year that you're going to be planning to do something that's out of the norm, like maybe selling a stock that has a lot of appreciation, or taking large amounts out from your IRA, because that can affect the taxation of your Social Security quite greatly.
Makes sense. Dustin Smith, thank you.